Okay, so it's time to talk about fundings. And this company got a loan during this year in 2020 of 60,000 with a 5% interest rate. And this is going to be reimbursed in 4 years. But not every year the same. So 50% will be reimbursed the first year, and then they're going to reimburse the same amount each year of the remaining. They also have a capital grant, and they also have money provided by the owners, and there's an estimated cost for this. So we're going to start with the loan, and the first thing I'm going to do is I'm going to create, sorry, I was writing in Spanish. We're going to create the chart for the loan to see how much interest are they paying each year, how much are they reimbursing, and so on. So we have the outstanding loan at the beginning of the year, then we have the interest, then we have the reimbursement, and then we have the pending loan at the end of the year. So it says this is going to last 4 years. 1, 2, 3, 4. The outstanding loan at the very beginning is 60,000 because this is what they asked for. So this is all the money they got. Then they're going to pay an interest at 5%. So we're going to calculate the interest as the outstanding loan multiplied by the interest. Since I'm using an Excel sheet, I'm going to take the chance to tell the Excel sheet this is going to be the interest rate for every year. Okay? They say the reimbursement is going to be 50% the first year. So 50% of what? Of what they got, 60,000. And then the pending loan is going to be 60,000 minus the reimbursement. So now we move to year number 2. What's the outstanding loan? What's the loan at the very beginning of this year? What was pending at the end of the previous one? Okay. The interest is going to be multiplying the outstanding loan by the 5%. And then we go to the reimbursement, and it says they are going to reimburse the rest amount each of the remaining years. So this means we have 30,000 and 3 years. 30,000 in 3 years, which means 10,000 per year. And pending loan will be the 30,000 outstanding at the very beginning minus the reimbursement. So this is going to be this pending loan. It's going to be the outstanding loan at the very beginning of the year number 3. We will do the interest the same way. We will have the same reimbursement. We will have the same formula for the pending loan at the end of the year 3. And again, we will have the outstanding loan, which is the pending loan of the previous year. We have interest for the 4th year. We have the final reimbursement, and here, when you arrive to the last year, the pending loan, it should be 0. If it's not, there's something wrong in the chart, okay? Okay, so now we're going to place this information in our payment, expense, and cost table. So we have the loan. We got the loan this year, so we have a collection of 60,000, and then we have payment. We have a payment that is the reimbursement of this year. So this is the information we need to translate into the other chart, because this first year of the loan is the same as the year 2020 in which we're building this payment, expense, and cost table. Okay. Then we have the financial interest. And remember, when we explained the loans, we said that every loan in the company was used for production, which means the financial interest is going to be a cost, it's going to be an expense, and it's going to be payment. You always have to pay this, because if not, the bank gets very angry with you. A very, very common mistake that I see super often is that many people add all the interest, okay? They calculate the total of the interest for the 4 years, and then that's the amount they place in the chart. No, this information goes from year to year. So this is year 2020, which is the first year of the loan, and this is what we place in our 2020 payment expense and cost chart. On 2021, we will add the information of the loan for year number 2. On 2022, we will do the same for the 3rd year of the loan. And in 2023, we will do the 4th year of the loan. Okay, so it's super important you don't get confused. The loan was, the company received the loan during 2020. So this is year number 1 for the loan. And this is the information we place in the 2020 payment expense and cost chart. Okay, let's move on. We have 2 more concepts. One is the capital grant. Okay, so we're going to add here a capital grant. And this is a collection, 20,000. And then we have the corporate capital cost, which depends on the amount of money that the owner in this case is providing. So it's 20,000 multiplied by a 2%. And this is an opportunity cost, which means it's just a cost. And this is all regarding the funding of the company.